गोल्ड में इन्वेस्ट क्यों करना है जानेंगे इस वीडियो में। गोल्ड में क्यों इन्वेस्ट करना है ये जानने से पहले एक ब्रीफ हिस्ट्री गोल्ड की। सिंस रोमन, इजिप्शियन एम्पायर्स and so forth back in the history of people trading gold for goods, very early on in mankind people realized कि जो gold के physical reserves हैं वो limited हैं, and that is why it is called a precious metal. In more recent history, 1947, after America became a superpower after the Second World War, America's currency became the world's reserve currency. Now why did it become the world's reserve currency? Well, America did win the war. America dropped bombs on Japan, but that was not the main reason. It became the world's reserve currency because at that time, according to the Bretton Woods Agreement, America told all the countries that the US dollar is as good as gold. That is, every single dollar in the US treasury can be exchanged for gold. That is why all the countries decided to make US dollar the reserve currency. But what kept happening as the other countries with time, China, India and all other countries, as their production increased and they started importing goods into the US, they came with lot of US dollars, and what they started doing was they started asking US for gold in place of those dollars. So because of this, the gold reserve of United States of America depleted. Seeing this, President Nixon in 1971 decided that the US dollar is no longer going to be backed by gold. And why did paper money come into the existence? First of all, earlier there was no paper money, which is called fiat money. It came into existence because carrying gold coins everywhere, carrying gold bricks to exchange in the place of goods, the barter system itself was inflexible. It did not quite work. So they needed an alternate form of currency which could be carried easily from one place to another. Now that physical currency, more or less 97% of it has also been replaced by digital currency in the world. So why should one invest in gold? Number one, it's a hedge against inflation. With inflation, everything becomes more expensive. Gold has stood the test of time. Gold's prices have increased with inflation. So if you have gold, gold is a brilliant asset class to hedge against inflation. There was an example because they said 3 grams of gold could buy a house somewhere in the US in 1947, and that is still true, that those 3 grams of gold can still buy a house in 2024. Even though the house prices have gone from here to here. Second thing, diversification of portfolio. You have stocks, you have real estate. Gold is a brilliant asset class and a time-tested class over hundreds of centuries of years to diversify your portfolio and minimize your risk. Number 3, your portfolio of gold usually has an inverse effect to the stock market. That is, when the stock market is going up, gold prices usually remain stable or go slightly down. When the stock market goes down, when there's uncertainty in the market, when people are panicking, people are fearing, then gold prices suddenly shoot up because gold is then regarded as a safe haven. Now, what are the different ways that you can invest in gold? Well, number one is sovereign gold bonds. It was an RBI scheme for which you can buy gold directly from your stock exchange or physically also. And there was no GST at the time of buying gold. Also, if you bought it online directly from your bank account, you would also get a 10% discount on the gold that you have purchased. So you are basically not purchasing actual physical gold in a sovereign gold bond, but you are purchasing a gold bond that has been issued by Reserve Bank of India. So these gold bonds had a maturity time period of 8 years, and you could take some amount of them out after a period of 5 to 6 years, let's say in certain conditions. For example, you have a marriage or some emergency, some kind of thing. And the best part of this investment was that you would invest in an SGB. The gold prices would keep going up, let's say for 8 years. At the end of 8 years, you will get the value of gold what is at that time when you are withdrawing your fund, and all the capital gains whatever you have earned on your initial investment would be tax free. The only drawback of SGBs was that the holding period of the maturity was very long, that is 8 years. Otherwise, SGB was a brilliant scheme, and you might have noticed that I am using was because as per rumors and as per what has happened, there has been no new SGB announcement. So it has already been approximately 6-7 months since the start of the year. So most likely SGBs have been cancelled by the government because apparently the government was losing too much money. Let's talk about the second form of investment, which is digital gold. What is digital gold? You can buy digital gold from a lot of platforms. You can buy it from Paytm or Google Pay or wherever. All these phone pay apps have a digital gold account. You pay the digital gold amount. They create a wallet for you in which you can see what amount of gold you have purchased and what is the current value of the thing. So there are two major disadvantages of this. First thing, you have to pay GST upfront. You have to pay GST at the time of selling. You have to pay a LTCG, that is capital gains tax. Now let's talk about gold ETFs. You are storing gold in a Demat form. So gold ETFs can have the opportunity to invest in physical gold, to invest in gold mining companies, can invest in all forms of gold, but you don't actually have to store physical gold with you. You can just go on a SEBI registered platform or a stockbroker like 𝗲𝗲𝗽 and you can just buy their shares just like you would buy a mutual fund. So all the same parameters of investment that applies to a particular mutual fund investment will apply to a gold ETF investment as well. A fourth kind of investment, which is gold funds. So gold funds are basically type of funds which particularly invest in gold mining companies only. So if a particular company goes default, then you have more diversification because they would be investing in multiple companies. That is great, but still the likelihood or the chance where your investment can go down is higher here because their investment is not actually linked directly to gold, but instead to the performance of stock mining companies. And number 6, last but not the least, is physical gold. So you can buy physical gold in the form of gold coins, gold bars, your local jeweler, any other online or physical store that you might buy which is not a branded or a well-reputed store. There have been a lot of incidents where they have done some kind of mixture of gold with silver or done some things like that which reduce the purity of gold, and they have looted their customers basically. So what I would recommend is, even if it means paying a slightly higher premium, if you're going for physical gold investment, just go for your peace of mind. Just go with MMTC, which is a government company and has an association with a Swiss company, 𝗱𝗲𝗃. They are the most authentic, most branded kind of physical gold that you can buy in India, and they have 99.9% purity also. And also when you receive the gold, they have a barcode at the back. You can scan it and go to the MMTC site and you can register your gold also. That proves to you that the gold is authentic. Now, physical gold has its own advantages that I'll discuss in a little bit, but the major disadvantage about physical gold is that of course you have to store it. Either you have to store it at your own home at a risk, or you have to store it in a bank locker somewhere. Now, what is not a gold investment that many people think it is? It is jewelry, of course. Why we don't consider jewelry as a gold investment? Because apart from all the GST and all that you pay at the time of buying, main issue with jewelry is the making charges. So making charges can range as high as from 10 to 20% at some stores also. So you are losing 20% of your investment straight away. So as much as your wives or your girlfriends would like you to believe, we are sorry to say, jewelry we don't consider as a investment. How do I use gold in my portfolio? Well, I bought a lot of SGBs, which is sovereign gold bonds. They used to open 4 times in a year for 4 days each quarter. SGBs had all the benefits. They were tax free, there was no GST. There was only one disadvantage of SGBs, that the maturity period was very long, that is 8 years. Otherwise, SGBs was a brilliant investment. Now, another experience I had was with digital gold 2 to 3 years back. Before I started investing in SGBs, digital gold is just a bad investment. Upfront GST, then when you sell it, you get a much lower value as well. So I would not recommend. It is very less regulated. Gold ETFs are regulated by stock exchange. Physical gold, if you're buying from MMTC, you know you're already buying a product which is very pure. And also SGBs were regulated by RBI. But digital gold is a very unregulated place. If some mishap happens or company from which you have bought the digital gold wallet goes bankrupt or something like that, so I would not recommend you go for digital gold investments. After SGBs got over, my focus has been more towards physical gold, and I'll tell you exactly why. Because if you have stocks, real estate and physical gold as the portfolio, well, stocks, you're investing for the long term, let's say 10-15 years. So stock market usually comes and goes in cycles. There is a bull run, there's a bear run, there's a bull run, there's a bear run. And similarly with real estate, there are cycles in the market. Some places are going up, some places are going down. So both stocks and real estate are prone to cycles of highs and lows. If you pull out your money from the stock market at the wrong time, it is going to reduce your returns substantially. So you have to be very clever when you are withdrawing your funds from the stock market, whether you're doing an SWP or you're withdrawing your funds in full. Right? Similarly, real estate is highly liquid. So if you want to sell a flat or if you want to sell a land or anything, it can take months to get a buyer. So the money cannot be available at hand. If you have physical gold, whether you have it in your house or whether you have it in your bank locker, and you can just use it to your advantage, whether that advantage is using it in emergency, or you see that the stock market is, let's say, going down, I need to rebalance my portfolio. So you can just sell that gold and you can invest that money in the stock market at the right time to maximize your returns. How I see it, as a game of chess, as a game of tactics. So use physical gold as a basic backbone is your emergency fund and your insurances. On top of that, keep physical gold. The physical gold value will increase with time. It always has and it always will. And then on top of that, you build a portfolio of stock market and a real estate portfolio, right? So anything happens with your stock market is going down, so gold prices are likely to go up. So your gold is even going to give more return at that time. Another key thing is, if you invest in a gold ETF or a digital gold and all those things, you are again investing in paper assets. Stock market is a paper asset. Physical gold is a hard asset. Hard asset is the one that you can touch, that you have at your disposal, right? So let's say if a country goes bankrupt, India goes bankrupt. Very unlikely, very unlikely. But in the worst case scenario, if our economic system fails, it has failed in other countries before as well, then all your paper assets, all your stocks, all your mutual funds, they become worthless. The physical gold is a hard asset. It will still retain its value there. That is why if SGBs do make a comeback, I would suggest go 50% SGBs, 50% physical gold, and buy the physical gold for peace of mind from MMTC. Done. If SGBs don't come back, then buy physical gold and keep it with you from MMTC and build a portfolio of stocks, umbrella portfolio of stocks and real estate above it. So this was my video on gold investments. Hope this was helpful and I shared some new information with you. Thank you for watching and see you in the next one.